Disclaimer: trading in the financial markets involves a high level of risk. Anything done or said in this video is not by any chance financial advice. Any action taken from the influence of this video, I shall not take responsibility for whatsoever. What it is, you already know who it is. Alright, so on this video, I basically want to talk about developing a bias and using that bias as confluence. You get me? I'll be basically analyzing AUDUSD throughout. So developing a bias shouldn't actually take you more than 2 seconds, because the bias is basically the overall delivery or the overall direction of price. So it shouldn't take more than 2 seconds. We just tell, okay, this market is going down, it's bearish, it's on a downtrend, so I should be looking for sales, and that's it. That's my bias right there. As you can see, if I use this pen right here, you can see that, okay, AUDUSD has been delivering bearish and is more likely to continue this bearish delivery. And my job is to look for opportunities to get involved in a sell position and ride with the trend. You get me? And now the next step is to basically prove this bias that I have. And there are 2 ways we can prove a bias. You can either prove it by going on a higher time frame or going on a lower time frame. All right. And the best way, as I'd say, is to go on a higher time frame, because by going on a higher time frame, you can actually get a bird's eye view of what's actually happening. You understand? So I'll go now to my weekly time frame, and immediately on my weekly time frame, I can tell it, okay, this bias is precise. Again, because this market has been delivering bearish since 2013, and it is more likely to continue this bearish delivery. You understand? So now, once I have proven this bias, I can now determine my target, which is that low over there. That is the next run on liquidity. You understand? So I can get rid of this now and go down back to the daily. Now, I can now zoom in with a proven bias that I have, and with this bias in mind, this bias won't change regardless. You understand? So as you can see, on the daily is quite bearish, but notice how it has been consolidating for like 2 months, generating liquidity above and below this range. That is why you see that that bullish break over there. The price was generating liquidity for like 2 months above that range. So okay, actually you have a leg to the downside, you have a retracement, and then taking out the low and then taking out the high, because price had generated liquidity above that high. That is why I'm not considering that break as a change of character, but instead a liquidity grab or a stop hunt, whatever you want to call it. See, a lot of traders, they like to rename this just so they can get a lot of students or whatever, but it really doesn't matter what you call it. You can even call it refueling, because the theory behind liquidity is that liquidity acts as fuel to price. You understand? So price has to refuel Now, this break of structure specifically, I don't consider it as a change of character as many traders would. I like to consider this like a fake change of character or a redistribution model. You understand? So let me choose this redistribution right there. So this is a redistribution model. You understand? You can go and learn Wyckoff if you haven't. It's a quite long and deep concept, you know. But once you actually understand and learn it, you'll see how powerful it is. So now if I can go to a lower time frame like a 4 hour, okay, the 4 hour is bearish. Internal structure is bearish, but the slightest break of structure that is in line with our bias, we can immediately look for positions. You understand? Because at the end of the day, the higher time frame controls the lower time frame. You understand? So now, with that bias in mind, I can look for an entry level that is in line with my bias. If you can look at this level, this is a very valid supply zone. You can also see by that imbalance over there. This is a valid supply zone. Okay, me. And yeah, it's a very good setup if you ask me. Considering that red wick over there, that's like that's my indicator telling me to sell at a supply zone. And that low is the target. That's my lower time frame target, right? And now we can zoom out to see our daily target. That's my daily target over there. That's the next run on liquidity. And then our long-term target, our high time frame target, is that weekly low right over there, all the way down there. Yeah, that's the one. That's our long-term target. That's the overall run on liquidity. All right. So now I can go on a lower time frame and look to confirm this supply zone right there. And immediately as I look into this price action, this is some ugly ass price action right here. It's very wicked, and I like to stay away from these kind of price action. Now it's very fucked up. It's very fucked up, but the best possible move is to like just back off and watch price as it delivers. Watch price as it delivers, because currently it's very, very ugly. What I can do, all right, what I can do is wait for price to take out a low. This low looks quite sexy to me. It is an invalidation point. It's a structure point. Once price takes out that low, then the 15-minute will switch from bullish to bearish. Understand it? Because you can obviously see that it's bullish. Even if I can zoom out, the 15-minute zoom is bullish. You can even use this low right there. You can use that low instead of that one. So like kind of give price some room to breathe. You know? And I'm not even afraid of price running away, because it's a very long way down, as you can see. Even if price doesn't come to a supply zone that I will have, it's still a long way down, as you can see. Very, very long way down, all the way to that weekly low. Imagine. And It wouldn't obviously take a day. That's why you find a lot of traders suffering from what we call FOMO, the fear of missing out. As you can see, we'll have NFP on the 7th of July. And I believe that NFP will push price lower according to my bias. Understand? But at the moment, yeah, it's like a zone up there. So that's what I'll wait on right now. That's what I'll wait on. But notice how I moved with a bias from a high time frame all the way down to a lower time frame, even if my lower time frame, like a 15-minute, as you can see, is bullish, but I'm waiting on it to switch bearish, because then it would align with my higher time frame bias. You understand? Alright, so that's it basically for AUDUSD. I just wait for price to take out that low. And now it's basically the patience game from now on. I won't do anything unless price takes out that low. Understand? So yeah, it's all about the patience from now on. There's actually a very good example of this redistribution model. I think it was US30. I think it was US30. Let me check it out. Nah, okay. US30 just shifted bearish. Nah, I think it was NASDAQ. There's a very good example. I don't remember actually what it was, but I think it was NASDAQ. Let me find NASDAQ. That's 100. Yeah, there it is. Nah, I think it's on the daily. Nah, NASDAQ is just bullish. NASDAQ is just bullish. Nah, where was that shit? Was it on US 13? Nah. Maybe it was gold, yeah. I don't actually remember, but you get the idea though. You know? Sometimes when price takes out a structure point, it's not actually a shift in market structure. You understand? And ZDSHF is extremely bearish. Extremely bearish. So basically, another thing that I wanted to point out is that when price is on your lower right corner, you should immediately look for sales. Simple as that, bro. Like, it's really not that deep. Even when price is on your upper right corner, look for buys. Simple as that, bro. Like, a lot of people pay like 1,000 rands just for this shit, bro. If price is on your upper right corner, it is more likely to continue delivering on that corner, bro. You should look for buys. And even, let me just change this color right real quick. If price is doing something of this nature, going down to your lower right corner, you should look for sales. Like, it's really not that deep. It's really not that complicated, bro. A lot of people who spend like a lot of hours and hours trying to find an entry, they end up losing because they overcomplicate it. You see, Forex trading is not that complex. Get me? It's really not that deep. Price can either go up or down. Like, seriously, bro, it's really not that deep. It can either go up or down. You get me? So that's the end of the video. For those of you that actually watch my videos at full, I appreciate you guys. There's like 4 or 5 of you. You know what I'm saying? Even though you don't even subscribe, it's okay. It's cool. It's cool. And those of y'all motherfuckers that actually know me, I know that you stuck in my page. Fuck y'all. Actually, they like, the main purpose of this channel is like to look back few years later down the line, when I actually look back to the way that I used to trade. You understand? But I believe that price, the way that I trade will never change, because the delivery of price will never change. Again,